Morning, Ethan.
Good morning, Tom.
Morning, everybody. Right. So here we are, Munch and Learn on, is it Tuesday, the 8th of August? I think it is. Yeah. So welcome to the No Limits Group, Ethan. I'm Tom Allchurch. I'm one of the No Limits coaches here. Ethan, would you like to introduce yourself and your business?
Yeah, so my name's Ethan Edwards. I'm a ICAW chartered accountant. I've sort of been working in accountancy for about 13 years, and I run a practice in the Southwest with about 1,000 clients, specialising mainly in SMEs, doing accountancy, audit, taxation work and business advisory for all sorts of small, medium-sized businesses and individuals.
Great. And you're also an action coach client.
Yes, I am.
Yeah, great. Brilliant. Okay, so we've been working together for about a year, and today we're just going to have a bit of a conversation, from a financial accountant's perspective. What are the things that, what are the differences between successful client businesses that you see and non-successful client businesses? So why don't we start with that question? What's the big difference between success and non-success from an accountant's point of view?
Yeah, well, I think it's interesting. I think there's, we don't specialise in one area of industry, so we see clients from a variety of backgrounds, but usually the businesses we see are run, some of the things I'm learning in Action Coach are actually, in terms of strategy and tools and organisation, are much more advanced than I see in even some sort of 10, 15, 20 million turnover companies. Some of them you'd be surprised at how unorganised they are maybe, or how badly run they are. But that doesn't stop them being successful often. What often makes them successful is making sure that they're selling their time or product at a significant profit, and some of these, that's usually the key differentiator for us. Is there's some businesses that you look at and you think, well, they're not making enough money and they never will, and there's others that just, despite their problems, most small businesses all have the same issues, but these guys are just spraying out cash because they've effectively priced their product or service. It would be the key difference that we see.
So do you think one of the big differentiators there is, apart from the fact that they're hopefully tracking their gross profit numbers keenly, is one of the big differentiators the fact that they understand the value that they're delivering to their clients, to their customers? Yeah,
I think that's a good way of putting it. They understand their value, and I think that sometimes can just come from the individual. If they're confident and maybe a bit of arrogance almost, oh, I'm worth this, I deserve this, or my product's the best. Maybe it's just sometimes pure luck. They just priced it correctly in the first place, and it's gone well for them, or others it's they analyze it. But yeah, it's certainly knowing their value, and I think that's something you can sometimes see in a smaller business owner, is that tendency to undervalue yourself and maybe not think your time is worth the selling price that you really need to be using.
Yeah, it rings a few bells with me in conversations I've had with clients and prospective clients over the years, and an early conversation is always around pricing. Put your prices up. That's always an early conversation for me, and we often have to work through a large quantity of head trash to get to the point where prices are put up, and a lot of that head trash, I've had people say, well, I don't want to feel like I'm ripping my customers off. Yeah, I know, but you're not making a profit.
Yeah.
So yeah, getting your pricing right, key element. So let's just talk a little bit through gross profit. I mean, what are the key constituents, would you say, in getting clear about gross profit in the first place, from an accountancy point of view?
Yeah, well, gross profit is the profit directly attributable to the sale of your goods or your service. So That is your revenue minus the direct costs that are directly attributable to building that product or selling that service. So if you're a builder, it's the cost of the bricks. If you're building, you know, if you're making piping, it's the cost of the metal. If you're a hairdresser, it's the cost of your products. And it's really important to know that, because if you're not making enough profit over and above the cost of your direct goods to cover your overheads, not just now but into the future, you know, you're never going to go anywhere.
And we also want the labour element involved in in those cost of goods or cost of service included in the cost of sale, don't we?
Yeah, definitely. I think that's something that probably as a small business owner you don't take into account, is the cost of your own labour. If you imagine a bigger enterprise, there's going to be shareholders and directors, management team, and they're probably separate people. The shareholders are expecting the directors to make enough profit to pay the management and generate profit for the shareholders. In a smaller company, people are often thinking, oh, well, I'm making a bit of profit. Well, no, you're making enough to pay a manager a salary, which in a big enterprise isn't enough. They'd be saying you need profit over and above that to give to the shareholder. And that's often where we see people fall into the trap where you take on more work, you're making just about money to pay yourself a wage. You take on more work, you're constantly busy paying yourself a wage, and you just end up in a bit of a hamster wheel, never making enough to really invest back into the business or buy yourself some time. And really, you've just got a job you can't get out of. You're sort of running and trapped.
That's an interesting word, isn't it? Job. I mean, you know, so what you're describing there is a business that is a limited company with a whole load of liability and responsibilities around it, but the owner basically has just got a job.
Yeah. And you know, I don't want to get too far into another conversation, but I know something that the action coach would look at is, what's your end game? What's your exit plan? And we sometimes have those conversations and with small business owners, many of whom are thinking about an exit plan. But if you've just got a business where you can just about pay yourself a salary, you're really limiting your freedom and your future plans, because it's not an enterprise that you can give to someone else because you're so integral to it, and it's not generating over and above your wage. So it's very hard to build from there. It's very hard to exit that position. You really are not giving yourself a lot of room to maneuver in any direction, really.
Yeah. So we're talking about job just over broke. That's what we're talking about.
Yeah.
It's a good way to think about it. And going back into the cost of sales, you know, another important point for me in cost of sales, and often, you know, we'll see this on a set of accounts, is marketing always gets put in overheads, and marketing to me is a cost of sale. Marketing is a cost of bringing the new sales in, and it should be in cost of sales. And if we think about it in cost of sales, we then start to think about it as an investment. If we think of it in terms of overhead and things tighten up and we're thinking, oh God, where can we squeeze the overheads? Well, let's squeeze marketing. No, don't squeeze marketing. You know, if things are tough, we need to go and generate more leads.
Yeah, I think that's a great point. And I think there are other costs that should be, sometimes a small business owner has the tendency to go, oh, it's you know, oh, I had to pay some marketing cost. Oh, I had to pay VAT. I had to pay this. Those costs aren't going to go away, and we often talk to them about clients and say, look, these are necessary costs of business. They are essential costs that you need to build into your pricing, and that's worth thinking about. You know, when you're looking at your costs, not just saying, oh, what would I like to only have to pay? No. In reality, what are you going to have to pay to make this business a success? What staff are you going to need? What's the VAT impact? What's the marketing cost going to be? Take into account your own labour, and then price, but make sure your costs are covering that, because, like you said, marketing is not a luxury. it's something that's essential. And if you look at any big business, they are spending a huge amount of money on it. So there's a reason for that, because it works, and it's something you need to factor into your business.
Absolutely. So let's think about it from the bottom up. I mean, we want to be able to pay ourselves a decent wage, probably more than we expect or have got in our head. We ideally want to make a profit so that we can reinvest and grow the business and hire people and make a profit over and above that. And we've got our cost of our overheads, our fixed costs that we've got to pay every month. So above that, we've got to make a gross profit to cover that lot. So what are the levers that we can pull, to drive that gross profit?
Well, the main things you can control are, you can mostly control your costs. Your money coming in really is what you're in control of. Sometimes you've got costs you can't control, as we've just said, or you can control them to an extent. But when as an accountant, when I'm looking at my clients' profit and loss for the year, I'm looking for the big numbers. What are the things that are going to make a difference? And often their costs aren't always as big as you think in proportion to the sales, or maybe their materials are, but often the big number they can control is their sales volume, and the
volume and price
per unit. Because if you're looking, the average small business's P&L, they've got maybe £4,000 of insurance, say. Well, if they've got £70,000 of sales and £4,000 of insurance, even if they cut their insurance by 50%, they're still only saving a 14th of their overall sales. So it's of no consequence almost to put all your energy onto cutting back these costs. Even if you could cut them back significantly, your sales are the biggest lever you can pull, I think.
So volume and price.
Yeah.
And one of the interesting elements, let's just think about what happens if we decide to increase pricing, and let's use some simple numbers. Say we've got £100,000 worth of sales, £100,000 of sales, and I don't know, £20,000 of overhead. If we put the price up by 10%, then sales becomes 110,000 if we don't lose any customers, doesn't it?
Yeah.
So then there's a bit of an equation to work out. And actually, if we're going to put the price up by 10%, how many customers do we need to lose before we're in a worse position?
Yeah, more than 10%.
Yeah, exactly. Always more than 10%. Yeah, if the gross profit coming through is, £50,000, then you would have to lose 20% of our customers before we're in a worse position.
Yeah, and I think that's always a fear for business owners, but oftentimes it is not the case. Most, we call it price elasticity, but most products, people are buying from you. If you're a small business owner, for reasons other than your price, they probably value your service, your personality, they probably know you, the product itself. So it's not something we've ever really seen have a great impact. And I think if people looked at their own behavior and realized that every year their phone bill gets put up, every year their gas bill gets put up, every year their TV bill goes up, they probably don't immediately, most people, I certainly don't immediately go and change. I'm kind of used to it. I go, oh, O2 again, ripping me off. But I carry on. I carry on using them every year, because we're comfortable in that relationship. We know what we're getting. And most people would find that their customers would probably do the same, and they probably aren't as sensitive to price increases as they think.
And when you do lose customers, if you put prices up, which customers typically do you lose first?
The worst ones.
The most difficult ones.
Yeah.
The ones who demand more of you than you've actually agreed to provide normally.
Yeah, exactly.
Funny that, isn't it?
Yeah, and I think it's also worth to put, I suppose, to put it quite bluntly, if you are adamant that your pricing cannot be increased, that in the market you're in, you cannot put prices up anymore, and you cost up, and you realize that actually you're never going to make enough money to cover your overheads, well, maybe it's worth having a serious conversation about whether this is the right product you're selling or the right business to be in. But there are some things where if price is your only advantage, and you are sitting there looking at your business thinking, I just cannot, there's no way, I'm losing money and I can't increase it. Well, I think you need to have a think about your business model, your product. What else could you do? What other services could you provide? What other products could you provide which have a better margin? And I think that's also worth mentioning, that sometimes in business you go down one path. Maybe it's not the ideal path to get you to the life you want, so you can readjust if you do the maths and it's not quite the right direction.
Yeah, absolutely. Okay, so let's move in a slightly different direction here, and you're going to like this, because I'm going to ask you, from a perspective of somebody watching this who's a business owner who is going to be going to see their accountant, hopefully, with to look at their year-end results. What three questions should they have at the forefront of their mind when they go to see their accountant, either to review their quarterly numbers or their annual numbers? What are the questions they should be asking of their accountant? Let's make accountants' lives difficult here.
Yeah. Well, I know the questions they usually ask, which are, how can I save tax? But I think really they should be looking at, have you noticed any trends in my numbers? Would be a question that I never get asked, really, which I almost want to talk about, but the client's not always interested in. But have you seen any trends in the performance? What direction is my business going in? Because that's something, as the accountant, you're always looking at. Variances in the year. Is there any movement? Is the business going in a certain direction? If they're a chartered accountant, that's what they would have done a lot of training in, spotting. If the client's cost of sales is rising, well, maybe they need to put their prices up because they're going to end up squeezed in the position we talked about. I think they should also be aware of the key drivers. If we're talking about gross profit, I think they should be aware of that. And I think a key number they should probably also be aware of is their break-even point. So what were their total costs? What sales do they need to make to cover their costs? What number of sales? And their accountant should be able to, it might be quite obvious to them, they should be able to give them a rough idea fairly easily. And I think that's something that, well, you probably know as a coach, not many businesses look at their numbers, and probably not many of them know what their break-even point is. And if you think about that, you don't know at the start of a year how much money you need to make to cover your costs. When you say that out loud, that does sound kind of crazy, but so many of us do it. We go, because a lot of people, if you've been in business a while, you have a gut feeling for it. You can look at the bank, there's cash in there. There's a bit less in there this week. I better go make some sales. Oh, there's a bit more, I can relax. And we see that all of the time, but I don't think people realize the power of putting a number on something and giving themselves a goal. You'll be surprised what an impact that can have, just knowing, right, oh, I need to get this, and maybe giving yourself some targets and saying, well, if I make X amount, I can make 50 grand of profit. Oh, if I did this, maybe I'd make 100,000 of profit, and sort of setting yourself some goals over and above that break-even point.
I did a 5-year strategy with a client a few months ago, and we set an increase of gross profit. So we were looking to increase gross profit from 40% by 2% every year over 5 years. So it built up towards 50%. And the client said, how are we going to do that? I said, I don't know yet, but seeing as we've set the goal, we've got a much better chance of achieving it than if we don't.
Yeah.
And we'll figure it out along the way.
Yeah. Well, and as you know, there's many books and studies on the power of setting yourself goals and targets. There is data to back that up. It's not a hunch that if you put numbers on things, you are much more likely to achieve them. So I think that's something where an accountant can really add value as well. Is that, a lot of people say, I want proactive advice. I think they're often thinking about tax savings, but really it's setting KPIs, setting goals, giving them a bit of structure to aim for.
Yeah, and I think, for me, there's a couple of things around that. If you only meet your accountant once a year, meet them as soon after the year end as you can.
Yeah.
If you're meeting them 8 months after the year end, the data is, at least 8 months old, and it's meaningless. If you're meeting them 2 months after the month end, with a provisional set of accounts, you're going to get more useful information. And maybe be asking the questions about, okay, given my accounts this year, what goals should I be setting? What numeric goals should I be setting, looking at what we've got now, if I'm trying to move the business forward?
Yeah, definitely. And I think for a small business owner, sometimes it can sound daunting, if you're not checking any of this, we're not suggesting that you need to have a daily meeting with your accountant, reviewing the metrics constantly and checking, but take a step that is relevant for the position that you are currently in. If you're doing nothing at the moment, start meeting your accountant a bit earlier and start looking at the numbers. If you're already doing that, maybe start, doing it throughout the year, maybe get a digital accounting system. But it's about everyone's making small improvements, I think, and starting to understand the numbers and starting to pay a bit more regular attention to them. So if it's something you're not doing at all, don't feel you have to.
Yeah, build it into, one great bit of thinking for improving a business is to make 101% improvements. Well, treat your accountant as 3 or 4 of those 1% and use your accountant's brains to help you move forward.
Yeah.
Cool. Great. Okay. Is there anything else you think would be, little nugget, a gem of information before you go and see your accountant that you set you up right for the meeting?
Lots of things. Pay them handsomely. That's why. No, I think people make sure you've got a good relationship with your accountant, and I think one thing that I definitely, we're seeing, I'm sure everyone is on, if you've got digital accounting software, that's something that can give you really great information, where you don't, throughout the year without much effort. So I'd certainly recommend that. And I think just be interested in the numbers, and ask, most accountants like talking about numbers. They are numbers people. They've spent their life studying numbers. They're going to be interested in explaining it to you because that's what they're interested in. So don't feel stupid for asking. We probably like to think we're too clever. We'd probably like to think we're a bit cleverer than we are anyway, and like the sound of our own voices explaining them. So sometimes you get clients say, "Oh, I don't want to ask it. I'm sorry, it's a stupid question." And you're like, "Oh, no, ask me, please. I want to explain this to you." So go in there. If you've got anything, don't feel afraid to ask them to explain the numbers to you. If you don't understand what gross profit is, if you don't understand what operating costs are, I'm sure they'll give you all of that information.
I agree, and I think sometimes because we get a bit cost focused, cost centric. Sometimes we might think, if I go and have a quarterly meeting with my accountant, I'm going to get billed, a couple £100. But actually, what could you learn for that £200 about your business that would allow you to improve it? That's how I would look at it. What could I learn that would, not just cost me £200, but maybe make me 1,000? That's how I would come at it. Yeah,
exactly. Yeah, and again, I think big businesses, obviously, they have people trying to keep costs down, but they understand value when they're paying for things, and big companies are the ones spending the most on tax advice, the most on marketing costs, the most on legal advice, because they know the advantage it can give them. So
yeah, back in my corporate days, I think I had a habit of twice a year I'd go and have lunch with my accountant, and I'd go and have lunch with my lawyer, separately, because they were, there was always value to be had in those meetings. Worth taking the time out to do so. Yeah, definitely. Especially if they were buying. Yeah. Okay, let's wrap it up there, Ethan. But thanks very much for being with us this morning and for having a chat around how people can use their accountant better, and where their focus should be on gross profit. Brilliant.
There was one thing I thought I'd mention. Sorry, the reason we've obviously spoken about price and stuff today, and I know lots of people, small businesses, think, "Oh, well, I want my accountant to keep my tax bill down." And the simple reason I don't think that's as important for a small business is because you're not making enough profit to have a tax bill anyway. You know, you need to, there are lots of ways to save tax, and your accountant can help you with that. But as you know, and I know, the real tax advantages are there for people who've got, you know, 100 grand in the bank plus £1 million in the bank. You know, that's when the tax planning comes in. If you're not there yet, you know, focus on building profitable business first, and then there'll be plenty of people hovering around to give you some good tax advice and move it all offshore for you.
Excellent. Great session. Thanks, Ethan.
Brilliant. Thanks, Tom. Cheers.
Bye.